What's up, everybody? I apologize, but I couldn't force myself to go upstairs to make a video, so I'm going to make a video with this beautiful view as I enjoy my iced coffee. It's actually really hard to work when there's nice weather around you, and the more I'm in Florida, the more I'm on the islands, the more I hate New York City. It's absolute trash. But today's video is going to try to explain why we've been on an absolute tear for the last month. I mean, NASDAQ is up 15% for the last month, Dow Jones 8.5%, and S&P 500 is up 2.7%. So most people know about something called the Consumer Price Index, the CPI, and everybody knows that it's down to 8.5% from 9.1%, which means month over month, there has not been any inflation. Most people don't know that there's a ton of other reports that you should be watching. Besides for the CPI, the PPI, the Consumer Sentiment Index, which I'm going to go over today, the jobs report, the JOLTS report, so many other reports. We're blessed to be in the United States where we have so much accounting and data. Whether you believe in the data or not, this data does matter one way or the other. So today we had something called the Preliminary Consumer Sentiment Report. The actual report is going to come out, I believe, like August 28th. And the Consumer Sentiment Report covers three things. You have the Consumer Sentiment Index, you have the Current Conditions Sentiment, and then you have the Future Expectations, Consumer Expectations Index. So those are the three things that are covered. And then they give you three things. They give you the current for this month, they give you last month, and then they give you year over year. So it's current, month over month, and year over year. So consumer sentiment is how people feel like it's going to happen, like the sentiment in the market. The current conditions is how things are right now. And then the expectations is how it's going to be later on in the future. So the consumer sentiment currently is 51.1. It was 51.5 last month, and it was 70.3 exactly a year ago, which means for the month it's up 7%, but it's down 21.6 for the year. And don't worry, to understand this, I'm going to go over it in just a moment. The current conditions sentiment index is 55.5. It's actually down from 58.1 last month, and it was 78.5 just a year ago, which means we're down 4.5% for the month, and we're down 29.3% for the year. The expectations, which is very, very important. So expectations is huge because that kind of makes them feel, how are things going to be in a year from now? And current conditions also matter. So current conditions are down, but expectations are up. And I'm going to give you the data, and then I'm going to explain it. Expectations, 54.9. Last month, it was 47.3. And 1 year ago, 65.1, which means we're up 16.1 for the month, and we're down 15.7 for the year. You understand the numbers right here where I'm talking about? So people are feeling more excited about what's going to happen in the future. So if current conditions are bad, but future conditions are good, that means that people are going to be tightening right now, hoping in the future things are going to get better. And then in my opinion, and I'm not saying I'm right or wrong, the economy is going to ramp up and the economy is going to supercharge itself somewhere in 2023, which is what I've been saying the whole time. More importantly, the second half, the second 6 months of 2023 is when I believe that everything is going to come together and everything is going to be a lot better for stocks, crypto, so on and so forth. But when you think about it like that, you got to prepare for it before it actually happens, because by the time it's happening, people are not preparing and people are not going to take advantage, just like we've been taking advantage and preparing for the recession on this channel for the last 4 months. And that's why people part of the Adam Bergman Show know what's up. By the way, I have 3 channels. Click the links down below. Crypto, stocks, and real estate. This is probably going to go on all 3 of my channels. So please keep that in mind. One of the main things that's factoring the consumer price index, the consumer sentiment index, I apologize, is the actual inflation rate. So now we believe that the inflation in a year from now, 1 year inflation expectations is 5.5%. A year ago, it was 4.6%. So we're starting to get closer. Now, last month, it was 5.2%. Sentiment is huge. So people are expecting that the inflation is going to go down, while the median expectations for inflation is not 5%, but 3%, which is within the range of normal 2.9 to 3.1, which means people feel that after a year from now, right, maybe early 2024, eventually the inflation is going to go down to 3%, which is more of a neutral rate than what the Federal Reserve is saying. So Federal Reserve is saying it's like 2.5% is neutral rate. I don't think we're ever going to get to 2.5%, but if we can get to around 3%, that's really good to begin with. 48% of consumers, very important, are saying that they're blaming inflation for their deteriorating living conditions. So people blame inflation for everything bad, which means as inflation is going to go down, the perceived notion is that their living conditions are going to go up. So if they believe that inflation is going to start going down in 1 year from now, the expectations is 5%, that's a livable inflation. That's what I've been saying on my channel, that I believe we're going to get inflation down to around 5%, 4.5%, 5.5%, and people are going to be really, really happy that we can get the inflation down to that, because that's a livable inflation, right? When you're used to 8%, 9%, if you can get to 5, 5.5, this is going to be something good. So all of these things put together is what's driving the market. So just for you to understand, in June, we had the lowest sentiment ever at 50, and that is a record from 1952. Not ever, but since 1952. So it's like a 7-decade reading. So this is one of the things that I like to track to see what's happening in the economy. Besides for consumer sentiment index, you had the CPI, which was down to 8.5% from 9.1. And more importantly, we have something called the PPI, which is the Producer's Price Index. And the Producer's Price Index is a precursor to what may happen with the CPI. So CPI went down. Consumer Price Index also went down to 9.8. We were expecting 10.5. We were expecting to go up 0.2. We actually went down 0.5%. So now the CPI report for last month went down. PPI also went down, which is showing you, hey, maybe inflation actually is going down. Now we have the consumer sentiment report. So first we have like inflation, then we have like a wholesale inflation, right? The producer's inflation. And now we have how regular people feel, me, you, regular Joe, so on and so forth. So it's showing you that everything is starting to go down, down, down. Now, inflation is not going to get to 2.5%, but if we can get to 5%, this is going to be good for the economy. It's not all peaches, it's not all rainbows, but this is a good thing, and we're moving in the right direction. This is exactly what economists are looking at. Economists do exactly what we're doing here on the Adam Bergman Show. Gas prices, we have to track gas prices. Crude oil right now is trading at around $93, $94 a barrel, which is great. It peaked in early June at around 122. I'm keeping track of the commodity of oil. And an oil tracking is a precursor to what's going to happen to gas. Now notice, energy is going down, and energy is the main contributor to why inflation went down, the PPI went down, and the consumer sentiment report is going up. Everything revolves around gasoline, the gas you put into your car, whether it's diesel or regular, shipping containers, shipping ships, production, distribution, delivery, Amazon, Walmart, Target, all of this delivery, Home Depot, Lowe's, everything runs on gas, guys, at the end. So today's price of gas remains under $4. It's $3.97. Yesterday, it was $3.99. You guys are going to laugh and say, Adam, it only dropped a penny because it was like $3.97.8 today. And to this, I want to say, yo, you can't feel these microchasms, but look at the macrochasm. And I've been following it on this channel for quite a while. People are just only now starting to listen and watch my channel. Don't forget to like, share, and subscribe, because most people don't watch these boring videos that actually have to do with your life. And can you please appreciate that I'm doing this video without any edits? This is all off the top of my dome. I'm literally using a pen, a paper, a microphone, a camera, an iced coffee, and my pretty looks. By the way, guys, 13 pounds down, 13 pounds down. It's been 2 weeks on my diet, and I still am not breaking my intermittent fasting, and I'm still counting my calories while I'm on vacation. I'm going to give you guys an update in around 2 months with probably my shirt off to see how it's going in a month. So gasoline, $3.97.8 today, $3.99 yesterday, but a week ago, $4.11, a month ago, $4.65, and 2 months ago was $5.01. Everything I said today is super relevant and super important. Listen to me, seriously. Just relax. Listen to me. Open up your ears. Clean out the wax. This is all very, very important. I don't claim to be some guru or some genius. I'm just trying to do what the economists are doing. You don't need Wall Street to do your own research. You don't need Wall Street to be your own analyst. Right now, we are analyzing the economy together, day by day, week by week, month by month, to try to predict what's going to happen in the future. Inflation is going down. The sentiment among consumers is going up. The economy is going to get worse as there's going to be an earnings recession. However, we're planning for this. Next year, second half 2023, earnings are starting to go up. This is what I think. Look, this all started with supply chain, right? Supply chain issues and bottlenecking. Eventually, COVID's going away. You guys, you see it. COVID is gone. You know, that it's done. It's here. I'm not saying it's not here. I'm just saying COVID is like a flu now. China will not be closing down for COVID much longer, if any again. And unless there's some new crazy strain or some new crazy disease, China is getting the ability to open up their pipelines. The bottlenecking is going to stop. And if the bottlenecking in China stops, that means there's not going to be any supply and demand issues. The supply is going to go up in 2023. The demand is going to go back up in 2023. The supply is going to open up. We're not going to have any bottlenecking. Everything is going to get back to equilibrium at around 5% inflation. The earnings reports are going to get better in 2023. Everything is a lagging indicator. But there's different types of lagging indicators. There's long lagging indicators and there can be short lagging indicators. These happen to be both, right? So I'm giving you the CPI, but then I'm giving you the PPI, and then I'm giving you the consumer sentiment. You understand what I'm saying? Like they're all lagging, but they all go hand in hand, which is then going into the GDP. So then if this is lagging and consumer sentiment is starting to go up little by little, maybe they're going to start spending more money because they think inflation is going to calm down, which is going to bring up the GDP, which is going to get us out of a recession, which is going to bring up the stock market. You understand what I mean? This is all intertwined and interconnected. Guys, I hope you're learning something on this channel. We're learning together. Thank you very, very much. Again, seriously, it's not easy to do this. Most YouTube channels don't do this, especially not a single crypto channel can F with me when it comes to economy. These guys are stupid as F. And I'm trying, guys. I'm trying to teach you guys as best as I can as a normal, everyday person trying to make it for himself and his family. Thank you so much. Have a great day. The Berg is out.